What up, what up? Welcome back to another episode of Wake Up with Wops. We got an interesting video today because it's something I learned recently. It's an ETF called MAGS. This is the Magnificent Seven. It follows the most important seven companies like Apple, Microsoft, Google, Amazon, Meta, Nvidia, and Tesla. So if you want to be exposed to these companies and maybe you just don't want to go all in on Meta or you don't want to go all in on Amazon, you could actually buy this ETF MAGS and you could be exposed to all seven of these companies. Companies are not going to go nowhere. Put this in your 401k, put this in your long-term portfolios. I'm liking it. It's been pulling back because of the market and all these stocks are kind of oversold. Like we're gonna look into Microsoft, it's oversold. We're also gonna look into Meta and Amazon, both three big companies that are oversold. So I think it might be a good opportunity to maybe add some mags into your portfolio. Let's look at Apple. We're going to go individually and do some technical analysis. Apple is staying above the all-time high. It's actually showing really good relative strength compared to the market while the rest of the market is dumping. Microsoft not doing too well. This is actually oversold. We talked about it on X. You can see the low stochastics at 10 and it's under the lower Bollinger Band. Look at all these red days. It had the earnings here in October and ever since then just declining, really monster move down right at the 200-day moving average. So we would want this spot to hold for the future, just like how Amazon is holding now. Same with Amazon. It had its earnings and we actually entered into this trade when it bounced off the all-time high as a pullback to the 9 EMA trade. It's a setup we like on this channel. Anyways, we had to get stopped out of this and it's pulled back to the 200-day average and now showing support. Look at this low stochastics at around 11. So this is what we would kind of want for Microsoft. As you can see, it's heading to that 200-day now. Google showing very, very good relative strength, just like Apple. The whole market's pulling back and you can see Google's on a run. Meta super oversold. We're actually in this position trade. I'm going to hold longer because I really believe it's just been getting hit way too hard. Look at all these red days. It's below the 200-day moving average, which is our long-term trend. Getting to basically to like the April lows over here after the tariff news. So I'm thinking a reversal is going to happen soon. Look at the low stochastics. Nvidia had good earnings and it's still pulling back, probably because of the whole AI bubble noise and people are fearful. But if it remounts this 50-day average and the 9 EMA around 186, if we get price action above that, I'm liking Nvidia for a continuation because they had good earnings. So I think it's going to continue going up in the long run. If we zoom out, it's still in a crazy uptrend. And lastly, Tesla, it came down to fill that September gap and it was looking good. It looked like we were going to continue going higher, but basically doing a bear flag. Let me remove this so it can become a little bit clearer. You can see here, and this is the pole and now it's kind of flagging out. So it's not really good. It's looking pretty bearish for like a short or something. But I'm still looking. Hopefully we find support, remounts and moving averages. You know, Tesla's not going anywhere. Elon Musk, he's a G. And the reason why I'm doing this, guys, let's go to the swing top 100. A lot of my stocks, I have my watch list under certain categories. I put my best trades under A plus, like my best setups. And then you're going to see here, there's a lot of B setups and C setups right now. Look, this is C. All my stocks in the swing top 100 are basically B and C setups. That means they're not really good to trade. Let's look at Oscar. You can see here just on big downtrends. Let's look at HIMS. Crazy downtrends. We don't want to trade this as a trader. So that's why I thought maybe just going over the biggest seven companies, the Magnificent Seven, will be pretty cool for anybody that watches this that's a long-term investor. If you guys are short-term traders or long-term investors, I'm not really too sure about my audience. So just comment on this video. Say you're a long-term investor. Say you're a trader. Just so it helps me out for future videos. Let's do a quick update on my positions. We're still holding Netflix. It's not looking good. As you can see here, I had a mental stop around here. I just think it's been very volatile. The market's been fearful. So I'm holding, waiting for Monday. If we open up on Monday and we continue going lower, I'll probably close this Netflix trade as a loss. I also did a 10-for-1 split. It was when we got into this trade, it was 1,000. Now it's 113. So you get basically 10 times a share. If you had one share, now you have 10 shares after it does that stock split. And then, like I said, we are in Meta. waiting for the remount of 604, 605, which is this 9 EMA here. If price action gets above here, I think we make a run to 675 or even higher. I'm really liking Meta, maybe for a long-term play. Let's go over the Amazon loss. So we talked about entering here when it pulled back to the all-time high and the 9 EMA. When you zoom out, you see this is the all-time high. Usually that's a good sign of support, and it did bounce. We were in the green for a little bit, but rolled over, and it did not hold that 50-day average. So that's when I got out of the trade, and it continued going lower. Now, hey, just because I got out once doesn't mean I can't just jump in again. Now it's looking good. Maybe if we remount this level around 228, 229, these two moving averages here, then I would probably re-enter into Amazon. And then Ulta, guys, retail play. We talked about it. It was doing good. We were up like 5% at one point right here. You can see above the 50-day moving average here at 545. And then it just dipped. We got stopped out, and now it's bounced back to the moving averages. Not looking too well. So we cut that loss, and now we are just in Meta and Netflix. Basically, mostly cash. Just waiting for that opportunity to get into an A plus setup. I'm not trying to rush into anything. Cash is a position. Peace.